Hi, everybody, and welcome to this week's Middle Class Investor. This is Seth Martin, your host. Well, the big news this week came out of Europe with the ECB, the European Central Bank, and they were calling, Mario Draghi was calling for basically a QE style asset purchase, bond purchase type stimulus. And you can see from the red candle here for this week, the euro is down pretty dramatically, and so money basically left the euro and went into other things. So I guess the feeling is that if you got money in euros, it's not safe, and so some of these people are leaving the euro. Anyway. We're right in the middle, we're right in the lower part of this support area that I've drawn. I'm going to zoom out a little bit and let's look at the last 20 years of the euro. And you can see that the low is down here below 1-to-1 with the dollar, and that parity is right about in this area right here at €1 to $1. Now, if next week this trades down below this and the week after it trades below that, then the next support level is down here at 105, and looks like the euro would give way to lower prices. After that, I mean, there's not a lot more for it to go down except down into new lows. So, I don't know. It's unclear to me whether the euro can really even do anything quite like what the United States did, just because you have so many countries and so many different interests. I don't know. We'll just have to see. We've got what they say they're going to do, but I think what still remains to be seen is what they're actually going to do, or what actually happens. So we'll just we'll keep an eye on that and see what how that progresses. Now, if you look at the dollar, give that a second to come up here. Here we go. There's the dollar. You can see the dollar was strong on that news and is actually starting to break above our support area, our resistance area that we have on the chart here. So the way this works, if you're looking at a weekly chart, once you're above this area, which we are now, if next week we get a close above this high that was made this week, then we're likely to keep going through this support area and move to the next support area, which could be in this area at 99.73, or it can be in this area at 109.98, or all the way to new highs at 123. I think eventually we will get to those new highs. I don't think that's going to happen in this move. Very rarely do you get all of a move in one move. In other words, the market tends to chop back and forth as the buyers and sellers agree on price, and that usually doesn't happen in one run like this. So somewhere along here you're going to get a pullback in the dollar, I believe, and then you're going to make a run probably up for this 120 area. That could take a couple of years, so it's far enough out there that could take a while. So getting back to our profit charts, we talked last week about FXCM. That was the Forex company. You can see that it's recovered some, gap down here from, I don't know, $18 all the way down to like $1 or something. Now it's at $2.30. So I guess they're trying to cobble something together to stay in business. It remains to be seen the impact on that move that caught a lot of people in the financial markets flat-footed, and I think the jury's still out as to the ripple effects associated with that move by the Swiss government. The S&P 500 is still kind of grinding its way higher. I've got this little channel drawn on here to kind of show the most recent price action, the range of the most recent price action, and we came down. Came down here, made a higher low, so we're higher than this low right here. That should be clear. And we have yet to break above this high. Well, we broke above it, but we didn't close above it. So I think we will close above it. I mean, I think we got a, we had a little late in the week pullback, but I think you're likely to see this resume higher. Now, even if it resumes higher, but doesn't make a new high and then rolls over, starts to roll over this way, then you could start talking about, a potential trend change and a move back to at least support off of this previous low from back here. I think this was that December low? I think this was December this month. This is all January. I don't know. I could be wrong about that. I have to look at it after let me zoom out and take a look at that because I'm not. Yeah, this was actually October low. So December low was right here. October low is right here. So anyway, but there's really not much going on. It's kind of range bound in this channel, and it does seem to have an upward bias to it, an upward drift. So until it shows us differently, we expect that to continue. If you look at Germany appears to be bouncing off this trend, this trend line support that I have here. It seems like it wants to go higher. Now, what it could do is go to this moving average or thereabouts, the other side of the Bollinger Band, and then start rolling over. But it does look, the trend is intact, so it's reasonable to assume that this go, to newer highs. I mean, it's reasonable to assume that Germany eclipses this previous high and then pulls back and then goes higher. So I think it's reasonable to expect that to happen. The thing that's got me a little bit cautious about all these markets is oil, and really all commodities. I mean, if you look at the what is it? Is it the CCI? No, I can't remember what the commodity index is. But if you were to look at the commodity index, you would see that basically the aggregate of all commodities are in a bear market. I mean, really kind of started 2.5 years ago or so with gold. And some commodities are bouncing, and I expect oil to bounce here pretty soon as well. In fact, let's just go look at oil real quick. This is an important commodity, obviously. And we can see this was the 2008 move, the move that took place in 2008 and then in 2009. And this has been the last 6 years, this chop, upward. This kind of chop upward. And then this is the most recent sell-off, and you can see that is pretty dramatic. So, but we're getting, a lot of times the way these things work, this old low here is $33.20, thereabouts. Let me get the exact low, $33.10. So a lot of times the way this thing will work is this will come down. Let's say that $33.10. I don't know because it's not on the screen, but let's say that's it right there. That's the $33.10. A lot of times this will come down, won't go all the way down to the low, and it'll bounce really hard, and then it'll make its way down to a new low past the old low. So having said that, I would expect a pretty good bounce in oil. Now this low over here is the first move down. So what we can say about a bounce in oil is that, and you can see I've got it marked here with the $75, is that oil is not likely to move through that line there. So but we could get a pretty substantial bounce between, as high as $60 to $70 oil. And this could be actually a fairly complex move, kind of like what you saw in gold that takes like, a year to make. And then another acceleration move to the downside. So I don't know if that's going to happen, but it's reasonable to assume that oil's getting close to a bounce here. It looks like to me, just near term, it wants to make, I don't think this low is going to hold. I think it wants to make a little bit lower low, then come up, and then down, and then bounce. So we'll just see. I mean, that's just my best guess. If I were trading oil, that's kind of what I would look to happen. But we don't really know. The UK, let's look at the UK real quick. The UK looks like it's bouncing. Now it's come to a higher low, higher than this low here. Zoom in on that. So this low is higher than this low back here, and it does look like it's bouncing. So this could have just been a deeper pullback and then off to new highs. I think what we want to see here is we'd want to see, the way the market moves again, you'd have a resistance here. So this would come up. Let me zoom in a little bit. So you got a resistance here. Okay. You got another resistance in or about here. And then you have the previous high right about here. Okay. So the way the market, what you want to see in a steady up move is you want to see it move to here and then pull back. And then here and then pull back. And then to here and then to pull back. And then to keep going. Okay, that's what you want to see in an uptrend. Obviously, at any one of these, let's say it goes here, pulls back, goes here, and instead of pulling back to here and going, what if it does? What if it does this? Now you've got a potential lower low or a lower high here, right? Lower high than this high. This could be a potential trend change. And then, of course, we would wait for it to take out this low, and then we'd say, that's it, trend change. Okay? That's kind of how that works. Hope that's not too confusing for everybody, but that's the UK. Let's look at the global Dow. The global Dow, this is kind of an interesting chart because it makes up about 40% of the global Dow is U.S. markets. And you can see the global Dow looks much weaker. Looks much weaker than the U.S. indexes, which tells me that the global markets are a little weaker than the U.S. market. And you can see here we've already got a lower low, right? So we've got a lower low, but we have a lower high, but we have a higher low, higher than this low. Okay, so what could happen? Well, we could come up to this line, okay, so the market could come up here, pull back, and then make a higher high, right? Or the market could pull, see, we're kind of right in the middle, right? So it's anybody's guess. The market could come up a little higher, but not take out this high, come back to there, and then there, and now you've got, see, a trend change. Okay? So we're at a really, 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 really critical place in the global Dow. And I think the global Dow is a good thing to watch here to tell us, whether or not we need to take some money off the table. And the reason I say that is because the global Dow has got not just our markets, but other markets around the world. And the markets are so interconnected now. And so if you start to see some weakness in the global market, that weakness is probably going to spill over into the U.S. market. I mean, it's just what happens. So we're going to, starting, I don't know, we've been looking at it for a while, but I'd say starting this week, we're going to start looking at the global Dow a little bit more carefully, and to see if if it helps us glean something a little more about the future than what we've been able to see here thus far. Here's the VIX. We've talked about the VIX before. Because the market, because people can't just dump their, pull their money in and out of the market. They use index options from the S&P 500, and the demand for those inverse options, or those put options, drives the value of the VIX. So when the VIX is high, that means there's a lot of activity in index option purchasing, and if the VIX is low, that means there's not as many index options being purchased. So this week for the VIX, we pulled back. We've had this trend line in here for a while. The market's leaned on this trend line a little bit here, but it hadn't really broken through it in a convincing way. So I'm just going to go ahead and leave the trend line in there. I think it continues to hold for now. And I think it's a good way to check whether what you see in the market is following through in the underneath. Think about this market, the VIX market, as being underneath the stock market. So if you look at the S&P 500, it was up, right, this week. It was up 0.55%. And the VIX, how much was the VIX down? The VIX was down 1.6%. And it's leveraged, right, because it involves options. So it's usually, if the market's up 1%, the VIX is down, 3 or 4 or even 5%. So it just depends on how aggressively people are buying those put options on the index. Let's go to my NinjaTrader platform and look at oil, crude oil. I've got a weekly chart on crude oil here, and let me zoom in a little bit so you can see easy. You can see this is our most recent move down, and if I click on this, it's saying that is, well, it actually isn't saying, but you can kind of see here we had a move down, like call this our first move down, a correction back, and then the next move down, and you can see this move is longer. This is typically what they call a wave 3 in Elliott. So if you look at, okay, what comes after 3? Well, 4 comes after 3. That's up. So let's look at 4, where 4 could potentially go. And you can see that if this is the bottom of this most recent move, then oil could bounce pretty high. It could go between, say, $65 and about $80. Maybe not quite 80, maybe $78 or so. So we could see a significant bounce. And if we get a complex kind of consolidation move, where it's a triangle, so that would look, you could get a move that looked something like, whoops, that didn't hold. Let me anchor that. Okay, there we go. You could get a move that looked something like this, where it goes up, it comes down, goes up, comes down, and goes up. And you can see with this move, you can see what's happening. The highs, whoops, well, what happens, I'm not going to draw it again, but what you can see about that, I must have hit a button that I didn't mean to hit. Let me exit out of this and try again. So I'll just redraw it since we move back. There we go. Zoom in. Okay. There we go. Okay, sorry about that. So we talked about up, and then back, and then up, and then back, and then up. Okay, so what you're seeing here is the highs are getting lower and the lows are getting higher. This is a consolidation pattern, and this is very typical after you have a very large move. But then what happens is you get a breakout of that pattern and you get a new low. Okay? Now, if we get something like this, it could last the better part of a year. So we could be looking at back and forth in oil, for the whole year, from this area right here. So don't be surprised if oil gets up to 75 and then back down to 55 and then up to 65 and then back down to 57 and then back up to 61. I mean, you could see that happen this year. And it could take all year. So it just gives you an idea of some potentials in the oil market. I mean, I don't really know what's going to happen in the oil market. Nobody really knows. But you could see it could be something similar what happened here in gold. So gold made a low back here. I'm not sure I'm actually on the screen here. I'm going to have to zoom this in a little bit. So oil made a, here's its big move, and then went up, down. See how it kind of traded sideways, and then this made a new low. So you can have something similar in oil, and if you look, see how long this took. This was June of 2013, all the way to the new low, which was November of 2014. That's almost a year and a half. So these consolidation moves can be quite lengthy and very frustrating for traders. But there's a back and forth, like a tug of war, to try to decide what the value is of this, in this case, gold. We'll look at the DAX real quick. The DAX, we pull back to this DP. What's interesting is if I do analysis on this DP, it went right to the target pretty much. So that's kind of how this little software system works. You can see the target was right here at 10,104, and actually has gone as far as almost 10,600. So, but now that it's moved, if we take a resistance off of this previous high, now that it's moved through the DP, if we get a close next week above this high, then we're going to likely see the DAX go to even higher levels. So the odds are that the DAX will pull back from here, but that doesn't mean that has to happen. Let's see, what else do we have on here that might be interesting? We can look at bonds. This 30-year bond. You can see that's what we forgot to look at is interest rates on the other. So this was that old high that we were looking at, and I was kind of shocked that there's still demand for bonds even at these numbers, but the rates went actually even lower than the old rate that was right here, right? We talked about that as a possibility, but I'll be honest with you, I didn't think it was a possibility. I thought this high here would hold, but and maybe it does, with just a short excursion beyond it, but it certainly didn't hold in the way I thought it would hold. And if we go look at the interest rate, the 10-year interest rate, which we never did look at while we were looking at these charts, you can see this old high is right here. This is the value that we were looking at bonds. So the bonds and the interest rate are inversely related. So here was that previous, it was a high on the last chart I just showed you, but here it's a low. And I was talking about I thought that would hold, and we blew right through it and made a new low. Interest rates got all the way down to this 1.7% area, which is pretty low. So if if you're going to buy a house, if you need to buy a house, you borrow money, it's a pretty good deal. The nature of interest rates, though, just as a secondary caution, prices tend to be higher when interest rates are lower. So it could be that if you're going to go buy a $400,000 house, you might be paying $100,000 more than you would be paying if the interest rates are up in this area. So you just have to be, I guess if you try to get a good buy, it doesn't matter. I mean, if you can buy that $300,000 house for about $300,000, then obviously this interest rate is a good interest rate to make that purchase. But if you're buying a $200,000 house for $400,000, 1.8% interest is not going to save you that much money. What would save you more money is if you could get the house cheaper. So anyway, it's just a side note. That's really about it. I don't have anything more to see. Nothing really happened in the market this week until really Thursday morning when Mario Draghi spoke. So I wasn't very active this week. I didn't do much of anything in the market. I'm hoping next week there'll be a little bit more to do. I'm just to let you guys know. I mean, I'm not suggesting that any of you do this, but I do some shorter term trading, and what I see is the S&P future going into this area, this 2070 area, and then pulling back at least to here, and then I'm going to be looking to see if it makes a higher high or a lower high, and then I'm going to be looking for trend change on a smaller scale to see if I can get on board a little early. But this move up here that you're looking at is a corrective move. Let me see if I can zoom in here on it. So we've got corrective, just means it's a 3-wave type move. So there's 1, 2, and then there's your third. And so corrective moves tend to be counter trend. So and this is on a very near term basis. So sorry about all that. So what I'm looking to happen is for the market to make a high into this area, this 2070 area, and then pull back, and then potentially make a lower high over here. So I don't know if everybody's following that or not, but let me just draw it real quick since I brought it up. Let me make a little space here. Okay. So what I'm talking about here is I'm looking for this is probably the low or close to the low. So I'm looking for the market to make a move up into this area and then come back to this area. So support off of this low would be right about here. And then I'm looking for the market to either come up and make a new high, in which case it'll make a much higher high. It'll be going much higher from here. Or I'm going to be watching for it to stop short of that somewhere in here and then start making its way down. And we've talked about this before, but if this is the first move down and this is the correction in the first move, this move here could be significant, and it's worth trading those moves. So that's just a little glimpse into what I'm looking for. That's really about it. I don't really see anything else that we need to bring up. Continue to watch the volatility index. I mean, part of what we can say here is that if the volatility index starts coming significantly below our green line here, then the market's probably going to make much higher highs. But if this low holds, and we'll probably see something this coming week, you might get some penetration of it, and then up. But if you get a sell-off, or if you get a move in the VIX below this trend line, and then it reverses up, look for the VIX to continue to move up and the market move lower. Now, if the trend line doesn't hold, then obviously that's not going to matter. But that's kind of what it looks like could happen. I mean, we got the market's bottom very much this way, and you can see, or top very much this way. You see kind of a little trend line develop, and the market touches it and touches it and touches it, and then at some point it just really takes off, either to the upside or to the downside, depending on what you're watching. Now the VIX in this case it's touched it, took off, pulled back, touched it, took off bigger, pulled back, went through it, which is kind of interesting because at the time it went through the trend line, it made a high but not a higher high, which is kind of interesting. It's like, wow, some of the sellers, because this got breached, said, you know what, I don't think the market's going to make new highs here, or new lows. And in fact it didn't, and it pulled back to the trend line. So it'll only do this so many times before it really takes off. So just keep an eye on that. I think the VIX can tell us something about the market that the price action sometimes doesn't tell us right away. And I think it's worth following the VIX for that reason. So here's the S&P 500. So we're looking for this to make a new high up into this resistance area, or if it comes and it doesn't make a new high and starts to pull back, it's likely to go down to this resistance or this support area. All right, everybody, that's it this week for the Middle Class Investor. Thank you for coming in. I appreciate all of your support, your comments. Share the link with those that you think could benefit, and let them decide for themselves if it's something that's helpful to them. And I don't think it's harmful at all for people to take a little bit more control over their own personal finances. There's more than enough information out there to learn and study this kind of stuff so that you could be effective and grow your own wealth over time without needing an advisor or having to be worried about being duped by an advisor. So, not that all advisors are bad or anything like that. I just think there's something to be learned or something to be gained by doing this yourself. That's all. All right, everybody. Thanks again for coming in this week. We'll see you next time. Bye-bye.